has more.
The call was initiated by former President Chakwera, who expressed concern over the law enforcement actions in Malawi, linking them to political arrests. President Mutharika says the era of political arrest has ended. He says the previous government oversaw a number of high-profile arrests, and many appeared to be politically motivated and resulted in a notable lack of successful convictions. Mutharika vowed to fight corruption when he took office last year.
Nigeria's police have now confirmed that a group of worshippers were kidnapped from 3 churches in a remote part of the northern Kaduna state after previously denying it. More than 2 days after the raid at the Komin-Wale village, police had earlier denied the implications. Local residents had earlier reported that 177 worshippers had been abducted, but that 11 later escaped. Police spokesperson Benjamin Hundeini did not give any numbers, but said subsequent checks by operational units and intelligence sources had confirmed the abduction. Amnesty International has criticized Nigeria's authorities over what it described as the desperate denial of kidnappings in the country. The South African police service have had to use stun grenades and water cannon as tempers flared at Addington Primary School in the KwaZulu-Natal province. March and March Operation and Dudula and the Umkhonto party members blockaded the school gates, confronting parents picking up their children from school, charging at foreign nationals. The Public Order Policing Unit has formed a line outside the school to protect the children and their parents. MK Party Bongani Cele says he tried to calm the protesters down.
It was overreacting of the police. The situation was under control and I was working with them. So the people that were angry, definitely, if you see masses, some they will provoke each other and so forth. As we've seen now, that one of the women who's a foreign national, she provoked the South Africans, of which it's wrong. But we try to calm the situation so that nobody get injured.
The Modimolle Regional Court in South Africa's Limpopo province has adjourned the trial of 3 people accused of stealing $580,000 from President Cyril Ramaphosa's Palapala farm in Bela Bela. The trial has been adjourned to Friday. Magistrate Peter Mantada adjourned the matter to allow the defense lawyers time to consult with their clients before they start with cross-examination and cell phone data analysts. The cell phone data analyst has testified that cell phone tower mapping shows that the accused, Emanuela David, the Joseph siblings, Froliana and Linasho, and other people were at the vicinity of the farm on the day the theft in February 2020 took place. Photos shown to BBC's Verify services have revealed the faces of people killed in Iran's violent suppression of anti-violent protests. Many sustained wounds, the BBC's Marilyn Thomas reports.
Hundreds of photos leaked to BBC Verify reveal the bloodied, swollen and bruised faces of at least 326 victims, including 18 women. We've been told that in the mortuary, relatives and friends were huddled around a screen, trying to identify their loved ones from hundreds of images of the dead. The slideshow is said to have lasted for hours, with the injuries of many victims so severe that the people couldn't be recognised. Labels on more than 100 victims showed the date they died as the 9th of January, one of the deadliest nights for protesters in Tehran so far.
Recapping on your top stories, Malawian President Peter Mutharika has had a telephonic call with his predecessor, Lazarus Chakwera. The former president had complained about the arrests of a number of officials who used to work with him. Channel African News, I am Onele Tsinzi.
SABC News. The African Perspective.
And coming up in your sports news this hour, South Africa's Sports, Arts and Culture Department signed a cooperation agreement with FIFA, while Manchester City have completed the signing of Crystal Palace captain Mark Guehi. Details of these and other stories coming up at 4:30.
Business, trade, and investment opportunities that put the continent first. Africa in Business with Thami Ngubeni.
It is a very good afternoon to you, Egypt, Tunisia, Eritrea, Morocco. Good afternoon, Eswatini, Tanzania, Lesotho. Good afternoon, Africa. Welcome to the Wednesday edition of Africa in Business on Channel Africa. I'm Thami Ngubeni. It's just gone exactly 6 minutes after 4 p.m. Central African time. Here's what we've got in store for you this hour. Uganda finalizes its deal to build its own oil refinery, and climate finance to dominate discussions at the Africa Green Economy Summit 2026. Do continue engaging with us on the various social media platforms on X, Instagram and YouTube. You'll find us at Channel Africa 1, and on Facebook we are at Channel Africa.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
We begin here this afternoon. It is exactly 56 years since the first meeting of the World Economic Forum in Davos. Founded by Klaus Schwab, the forum was conceived as a platform to debate ideas as well as to confront the pressing issues of the day. This year's gathering, however, takes place in a world transformed, a world marked by heightened geopolitical tensions, rising tariffs and growing global fragmentation. These shifts could fuel inflation and increase volatility in exchange rates. The question is, how prepared is South Africa's economy to cushion the impact? Channel Africa's economics reporter, Innocent Samosa, has the details.
It is day 3 of the World Economic Forum meeting in Davos, Switzerland. World leaders and business executives are convening today to address the summit amid calls for constructive dialogue in an increasingly complex global landscape. The question is, how prepared is South Africa's economy to absorb the impact? Lesetja Kganyago is the governor of the South African Reserve Bank.
For us, it is not just about inflation, it's also about economic activity. And our response in South Africa is three-pronged. Firstly, is that the central bank must focus on its price stability mandate, and importantly, that we pursue the new inflation target with vigor and make sure that inflation expectations are embedded. And we are able to do that because we do have the monetary policy space. So monetary policy remains focused on dealing with inflation.
Meanwhile, the French president warned that the world is drifting towards an order without rules, where conflict has become normalized.
And conflict has become normalized, hybrid, expanding into new domains, space, digital, information, cyber, trade, and so on. It's as well a shift towards a world without rules, where international law is trampled underfoot.
How concerning are these remarks? Institute Political Economy Lead at AIA Insights, Jana de Klever, shares her insights.
One could argue that the rules-based order has been eroding for a while. So Macron's message is less a shock than a naming of what many already feel. The center of gravity has shifted from rules to leverage. States are behaving as self-maximizing actors, and tools that used to sit outside the quote-unquote normal commerce, such as tariffs and sanctions, are now mainstream instruments of competition. In that environment, conflict isn't only military. It shows up as pressure on supply chains, technology access, and market entry. The real risk lies not simply in the erosion of rules, but in the failure to acknowledge that the assumptions underpinning the previous order no longer hold.
Where does this leave Africa? Is the continent at risk of being sidelined, or are there opportunities to be seized?
For Africa, this moment is not just a risk story. It is fundamentally a repositioning opportunity. In a more fragmented global system, value no longer automatically flows to the largest or most established markets, but to those that can navigate complexity at scale. Despite geopolitical headwinds, multinational companies and sovereigns alike from across the geopolitical divide continue to expand their presence in Africa, reflecting the continent's enduring strategic importance. Energy offers a clear illustration. As energy security becomes more central to national strategy, Africa is increasingly viewed as a frontier for long-term supply and partnership.
For Channel Africa News, I'm Innocent Samosa in Johannesburg, South Africa.
From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus, Channel Africa, the African perspective.
It is exactly 11 minutes after 4 p.m. Our focus remains on South Africa, where the National Union of Metal Workers of South Africa, NUMSA, says comments attributed to the National Association of Automobile Manufacturers of South Africa, NAMSA, CEO Michael Mabasa, are detached from what it describes as a national crisis in the automotive industry. NUMSA's response follows a statement by NAMSA in which the association reportedly described Chinese vehicle imports as fantastic and a wake-up call that South Africa and its vehicle assemblers should simply accept. The union argues that such remarks, made as the country continues to grapple with widespread job losses, are not only irritating but provocative. NUMSA says it will not accept a narrative that normalizes job losses and factory closures under the guise of increased competition and consumer choice. For more information, we joined on the line by NUMSA's national spokesperson, Phakamile Hlobi-Majola. A very good afternoon to you, Phakamile. Good to have you with us. Welcome to Africa in Business.
Good afternoon, and good afternoon to your listeners. Thank you for having me on the show.
So what a way to start the new year, right? You've come out as NUMSA quite critical of NAMSA's comments on the rise of imported vehicles in the country. Why have you taken exception to these comments by the association that Chinese vehicle imports are, I quote, fantastic and a wake-up call for South Africa and its vehicle assemblers?
Yes, as the National Union of Metal Workers, we have taken note of the commentary made by Michael Mabasa, who's the CEO of NAMSA, and basically where he says that we should be looking at, or we shouldn't just look at it from the side of auto manufacturers being threatened, that we should celebrate the flooding of cheap Chinese vehicles onto the market because of the benefit to consumers. Our view as a union is that, first of all, we're not against consumers being able to access cheaper vehicles. We think that is important. We think it's important for the domestic market to be affordable, for vehicles rather to be affordable to the domestic market. Our problem is that what you have here are comments from the CEO of, one of a representative of the industry, who in our view is not presenting a full picture of the situation. Cheaper Chinese cars may benefit consumers in the short term, but if you're looking at this from that very narrow perspective, you will miss a fundamental issue, which is that they do not necessarily automatically benefit South Africa's economy, the industry as a whole, or the industrial base. And those for us are two very different issues. And we feel that he has simplified the whole debate, made it purely about the consumer. He's not actually looked at other fundamental issues that over in the long term are going to have an impact on the very same consumer that right now is benefiting from cheaper cars. And we view that as a short-term benefit.
So from your assessment, are you saying that there's a risk that NAMSA's stance prioritizes market growth over job protection? Is that your fundamental argument here?
Well, if you want market growth, you can't just be looking at the cheapness of the cars, because the reality is that whilst yes, NAMSA is experiencing, or there might be a surge in people purchasing cars, that population of people purchasing cars is shrinking daily as companies close, as factories close, as deindustrialization increases in South Africa. We have to look at what are the Chinese doing in South Africa. Is their role to increase local manufacturing? Is their role to increase domestic job creation? Is their role to increase industrialization locally? Do they, for example, procure locally from local producers? Are they making sure, for example, that whatever they're doing benefits the local component manufacturing industry in South Africa? Unfortunately, the answer is no. So this is why we're saying that the analysis that the representative from NAMSA is giving is very superficial, and it's not looking at all of the issues which ultimately contribute meaningfully to the growth of the industry and the growth of the sector in South Africa as a whole. Because the reality is this: we might have cheap cars from China today, but if you don't address the things that I've just mentioned, that base of people who are working and are able with disposable income to buy cars is shrinking. If Ford, for example, goes ahead with the with the retrenchments that it has already called for, and other companies go ahead with the retrenchments that they're planning or that they might be planning as a result of the onslaught of cheap Chinese vehicles, and those workers are not absorbed in new industries, perhaps replaced by China, okay, whether there's some level of assemblies in South Africa, then we're not benefiting, because it just means that we're actually adding to unemployment, and you're going to have an even smaller base of people who are going to be able to afford these cheap Chinese cars that the NAMSA executive is currently celebrating.
Let's look at this, Pagamile. In essence, consumers are getting the best end of the deal. They are now able to purchase cars at a much more affordable rate. But what efforts are being made as far as trying to reduce the prices of cars that are perhaps manufactured in South Africa? What measures have been put in place to address those long-standing structural issues that we've been discussing for a while now? High production costs, the instability of electricity supply, logistics bottlenecks, for example. Are those other approaches and discussions that are being had right now?
So on those issues, those are also fundamental issues that must be addressed, and I'm not saying they're not important. They definitely are important, and they're part of the conversation. By the way, he doesn't mention those things. He only mostly talks about how this is cheaper for the consumer, without addressing some of those industry issues that you've just raised, such as the bottlenecks in manufacturing, such as regularity of energy. All of those things, we need those things if we're going to boost manufacturing and industrialization. There's no argument there. But unfortunately, he doesn't talk about that. And that's why we're saying that the argument that is superficial. It's superficial even from that perspective. But also what he doesn't talk about, for example, is that since 2018, we've had imports from China and India. These have grown to about 26% of the market. At the same time, we've seen plant closures in the component sector. We've seen thousands of skilled jobs lost. We've seen local suppliers being pushed out. And what we've also seen when it comes to Chinese companies is that many Chinese firms, when they come to South Africa, they don't use local labor. They bring their own skilled labor. They also import most components, and the local procurement and skills transfer is minimal. So what we're saying is that you cannot have an argument or promote the flooding of cheap Chinese cars onto the market without addressing these fundamental issues that I've just mentioned, which are actually directly tied to local production, job creation, and increased domestic manufacturing.
Let's bring in then Pagamile, the Department of Trade, Industry and Corporation. And what are the specific policy interventions that you as NUMSA are calling for in order to protect the local automotive industry and those jobs?
So we have actually been very clear that the Department of Trade and Industry needs to do more to protect the local market. We've said this, they're aware of this. We've submitted documents and papers and plans. We've been very active on this front. And we are not excusing the DTIC and its role in relation to this. We are simply saying that it is a mistake to simplify this debate and make it purely about cheap cars. This discussion can never just be limited to cheap cars. These cheap cars must also contribute to job creation. They must also contribute to local production. They must also contribute to the protection of the domestic components sector in South Africa.
We'll
We
have
have
to,
a response.
We'll have to, unfortunately, Pagamile, leave it at that today. But I think point well articulated there, a very holistic or a more holistic approach to this entire situation is to be desired. We thank you for your time, ma'am.
Thank you so much.
Thank you. That was NUMSA's national spokesperson, Pagamile Hlubi Majola. Michael Mabasa, we did reach out to him, the CEO of the National Association of the Automobile Manufacturers Association. We reached out for him for comment, but we were unable to reach him, therefore a right of response. If at any point, he does respond and he does want to take this further, we certainly are here for that. It's 21 minutes after 4.
Stay tuned to Channel Africa. Stream us on our new and updated website, channelafrica.co.za. Channel Africa is moving with the times, and so is our WhatsApp line. We've changed our WhatsApp number, making it even easier for you to stay connected. Send us your voice notes, comments, shout outs, and song requests to our new WhatsApp number, +27 83 288 6684. That's +27 83 288 6684. Save it, share it, and stay in the conversation. Channel Africa, the African perspective. Africa Update on Channel Africa with Lulu Kabu.
Congolese President Felix Tshisekedi has now accused Rwanda of violating the peace deal. Are you surprised at this latest accusation? This is literally days after a signing, a ceremony, so to speak.
This is not surprising. I mean, if you ask Paul Kagame, he would also say almost the same thing. One should ask a question. The broker of the peace deal, President Trump, what is it that he wants? Why now? And why is this peace deal being signed in the Americas and not in the Great Lakes? Paul Kagame has never respected Tshisekedi, as often say. Tshisekedi must deal with the problems in his country. He has nothing to do with it. So this peace deal, obviously, when it was signed, one just looked at it and said, this will not last.
Kenny Matiba, former journalist.
Africa Update with Lulu Kabu, 12 to 1 p.m. Central African Time. As 2025 draws to a close, we pause to honor the spirits that connect us. The festive season reminds us of what truly matters: family, community, and unity. No matter where you gather or reflect, Channel Africa is with you. Bring you stories and voices that are shaped by the African perspective.
Something significant happened on this day. Asanda, you were a baby, I'm sure. I'm not even sure if you were born. No, you were a baby, yeah.
Yoga. Matseko is still trying to convince me and flip me over.
I've done that already, and you're going to come now on the journey.
I will try.
From all of us to all of you, may your season be safe and peaceful. Channel Africa, the African perspective. Africa in Business on Channel Africa.
It is 24 minutes after 4 p.m. Central African time as we turn our sights to Uganda now, where the country's long-delayed national oil refinery is entering a rather critical phase, with the government edging closer to finalizing a $4 billion partnership with a UAE-backed investor. This is a move that could reshape fuel supply dynamics across East Africa. After more than a decade of setbacks, the project is now progressing towards a final investment decision, or FID, expected by July of this year, following the signing of key agreements between the Uganda National Oil Company and Alpha MBM Investments LLC, a Dubai-based firm. For more on this, we joined on the line by Dr. Micah Abigaba, an energy economist as well as lecturer in the business school at the Makerere University in Uganda. A very good afternoon to you, Doctor. Good to have you with us. Welcome.
Good afternoon to you, and thank you for having me.
Perhaps let's start off with getting an understanding, Doctor, as to why there were delays in finalizing this refinery deal.
Okay. So to kick off, it's good to understand where Uganda has come from. So Uganda is a prospective oil producer. We're yet to start production. Uganda discovered oil in 2006 with an estimated 6.6 billion barrels of oil. about 1.65 billion barrels are considered to be economically recoverable. And production is expected to start mid this year. So for the past 10 years, there's been pushing for the development phase, development of the oil fields, setting up the East African crude oil pipeline, the roads, the infrastructure. So there's been a lot of that. So commercial production, like I've said, is expected to start before this year ends, 2026. And at peak production, it's expected that Uganda will be producing about 240,000 barrels of oil per day. And most of this crude will be transported via the East African crude oil pipeline to the port of Tanga in Tanzania. So again, now back to the question. The plan now is to set up a refinery with a capacity of about 60,000 barrels per day, 60,000 barrels of oil per day. That would be the capacity of the refinery. So when you look at the largest proportion, say at peak production, would be exported as crude oil. And then the refinery, the rest of the crude oil, the 60,000, would be fed into the refinery to produce the refined output. So most of the delays, when you look at trace back the delays in the development phase of the oil project, of the Albertine oil project itself, have basically delayed the refinery itself. There are also other issues like securing financing, especially due to the global climate concerns. And then there've also been issues, and we are also talking about a high cost of $4 billion US. So that high cost, also given the uncertainties and risks, the best strategy would have to be some kind of partnership that we are seeing in this case.
And on that very point of partnership, how critical will cross-border infrastructure agreements with the likes of Kenya, South Sudan, the DRC and Rwanda be to the refinery's success? And also maybe if you could just comment on how this particular development is going to impact the East African fuel supply chain as well, and the gaps that it fills in that region.
Okay. So you've had, when we talk about the cross-border infrastructure, of course, these agreements are going to be very critical, particularly for the DRC, the DR Congo, South Sudan, Rwanda, and Kenya. We are looking at these would be definitely very critical for the refined products, particularly for the refined products pipelines to transport the refined products from the Albertine region to the regional markets, and also to ensure stable demand for the refineries' output across the region. Then we also expect that we see that Uganda will likely consume between 27,000 and 40,000 barrels of the refined petroleum. So with the rest targeted for the regional markets. So it's critical to establish these cross-border infrastructure agreements. We're also looking at agreements in terms of that position Uganda, these infrastructural agreements would position Uganda as a cheaper, more reliable and relatively closer supplier, and to also ensure efficient and cost-effective distribution. So when we're looking at infrastructure, you're also looking at some kind of, I've talked about the product pipelines, but also the road network, like we've seen with the Uganda DR Congo road network collaborations. So these would then make transportation costs relatively lower, which would ensure Uganda's refined output is competitive globally to secure the regional markets. So that would certainly be critical. Without these agreements, the refinery risks the refinery would risk operating below capacity, which would likely make it economically unviable. So they're very critical.
Let's take a look at the competition that Uganda faces at the moment. With this Dangote refinery, they've been targeting continental as well as global markets. Can Uganda's refinery realistically serve beyond East and Central Africa, in your view?
I think right now, especially looking at the geographical location, in terms of Uganda's focus right now has been on the regional market. So I think that's a safe strategy. So in comparison to the Dangote refinery project, I think it would be fair to say that Uganda would not really compare. Uganda is looking at a capacity of 60,000 barrels per day. You're talking about Dangote's, which is at 650,000 barrels per day, and which is actually has secured a deal to expand to 1.4 million barrels of oil per day, that kind of capacity. So I think in comparison, it would be unfair to compare the two because the scales are quite different. But I think Uganda placing itself as a regional competitor within the region is safe. What's going to be critical is for Uganda to secure these cross-border infrastructure agreements.
To
be competitive.
You've really highlighted.
Competitive.
You really have highlighted really well how essential these agreements are for the very survival of the refinery itself. Dr. Micah Abigaba, we thank you so much for your insight this afternoon, giving us great perspective on Uganda and its foray into the business of oil. Thank you for your time, ma'am.
Thank you for having me. It's always a pleasure.
It really is. Thank you. That's Dr. Micah Abigaba, an energy economist as well as lecturer in the business school at the Makerere University in Uganda. She takes us to exactly 33 minutes after 4 p.m. as we head over now to the markets desk, where Chanduko Ligege is standing by with your latest market indicators.
Business news on Channel Africa. The African perspective.
Thank you, Thami. Good afternoon. $1 is trading at 16 Rand 41 in South Africa, Botswana 13 Pula 24, Namibia 16 Namibian dollars 41, Zambia 20 kwacha 4 to the US dollar, Kenya 128 shilling 05, Ethiopia 155 bih 69, Uganda 3,000 shilling 443, Tanzania 2,000 shilling 516, $1 in Nigeria is 1,470 naira. Egypt, the dollar is 47 Egyptian pound 43. Tunisia 2 dinar 89. Algeria 129 dinar 15. Morocco 9 dirham 07. Angola 911 kwanza. The Congolese franc is 2,130. And then looking at commodities, gold is at $4,873. Platinum at $2,491 per ounce. The price of Brent crude oil at $65.12 a barrel. That is all from me. For any business stories you'd like to share with us, please send us an email to newsroom@channelafrica.co.za, or you can call us on +27 11 714 4459. For Channel Africa Business, I am Chanduko Ligege.
Business news on Channel Africa. The African perspective.
And for the latest from the business of sport, here's Musibudi Makura.
Sports on Channel Africa. The African perspective.
Thank you so much, Thami. A very good afternoon once again from the sports desk. Well, South Africa's Minister of Sports, Arts and Culture, Gayton McKenzie, signed a cooperation agreement with FIFA Development Zurich, which will then establish a FIFA office in Johannesburg right here in South Africa. The agreement was concluded on the sidelines of the 2025 Africa Cup of Nations final in Rabat, Morocco, with FIFA President Gianni Infantino. The deal will create a FIFA Regional Development Office in South Africa's largest city. It also provides a framework for South Africa to facilitate FIFA administrative, movement, as well as operational activities in the country. FIFA will assume the responsibility for funding as well as staffing the regional office, which will serve South Africa as well as its neighbouring countries. The Department of Sports, Arts and Culture's obligation will include visa assistance, customs support and liaison with relevant authorities, and FIFA will bear the full costs of office operations, personnel as well as program delivery. Mackenzie said the agreement reinforces South Africa's larger intention to expand collaboration with FIFA and CAF in areas that benefit communities, youth participation as well as football ecosystems worldwide.
FIFA's regional office is in South Africa and it's an iconic building and we've been working on it. It's now happening. We've signed with the president of FIFA and myself that the offices is now going to come to South Africa. It's going to be housed in South Africa, serving 14 countries, including South Africa, around South Africa, the whole Southern African region. This is massive. This is big for our country. But this is what I said at the beginning. We are taking our rightful place. South Africa is standing up. Southern Africa is standing up.
Now, the new FIFA Regional Development Office in Sandton, north of Johannesburg, is expected to provide operational as well as development advantages for South Africa and its neighbours. FIFA's regional offices will serve as daily points of contact for member associations, which will also help deliver development programs, technical support, as well as capacity building for local needs. The department said that the initiatives under the FIFA Forward program have channeled more than $1 billion into African football since 2016. These funds have supported youth development football, women's leagues, infrastructure, as well as federation governance. Further field now, Manchester City have completed the signing of Crystal Palace captain Marc Guéhi for $28 million. The England defender, who has been linked with some of Europe's top clubs, almost joined Liverpool last season and was out of contract at the end of the season. Guéhi had a medical on Sunday after agreeing personal terms with City and has signed a 5.5-year contract with the Citizens. His arrival follows City's signing of Antoine Semenyo from Bournemouth for $62.5 million on the 9th of January. Guéhi said he is happy and incredibly proud to become a City player. While former Australian captain Steve Waugh is among the franchise investors in a men's European T20 tournament that is set to be played by City-based teams in Ireland, Scotland as well as the Netherlands later on this year. The 6-team European T20 Premier League was meant to launch in 2025, but the event was postponed because the sales of the participating franchises were not completed in time. However, deals have now been agreed for 3.5 years for a franchises team with 2 separate groups of investors from Australia and 1 from New Zealand. One of those is led by Steve Waugh, who is heading up the Amsterdam Flames, which is backed by a consortium that includes former Australian field hockey player Jamie Dower, as well as Australian businessman Tim Thomas. The Flames have already signed high-profile Australia internationals, including Steve Smith and Mitch Marshall, as 2 of the overseas-based players. And finally, airline Emirates have renewed their partnership as naming sponsor of New Zealand as the team step up their preparations to defend the America's Cup in Nepal next year. Now, Emirates team New Zealand beat Ben Isla British crew in the America's Cup match final in Barcelona in 2024, tightening their grip on the oldest trophy in international sport. Now, since their victory in the 37th edition of the 174-year-old event, the New Zealand team, led by Chief Executive Grant Dalton, have signed up to the America's Cup partnership, a framework which aims now to provide continuity for sponsors. The 38th America's Cup, which is also sponsored by Louis Vuitton, will see teams returning to race in AC75 foiling monohulls. Now, the Louis Vuitton Cup will decide which of the challengers earn the right to race the defenders in the America's Cup match later on this year. And that concludes your afternoon sports news right here on Channel Africa. For any sports stories you'd like to share with us, do send us an email to newsroom@channelafrica.co.za or call us on +27 11714 4459. For Channel Africa Sport, I am Musibu Di Makura.
Sports on Channel Africa. The African Perspective. Get the news, music, and lifestyle of Africa on Channel Africa. The African Perspective. Africa in Business. Africa in Business delivers key insights and real-time updates on Africa's growing markets with Thami Ngubeni. The African Perspective on Channel Africa.
Channel Africa. Thank you to Chanduko Ligege and Musibudi Makora. They take us to exactly 4:41. We turn our sights now to the African Continental Free Trade Area General Secretariat. Wamkele Mene says that the cost of infrastructure, transport as well as logistics and trade finance continues to be high. This is the continent gearing itself up to prosper in what's being described as, I quote, the new economy. Mene was speaking at the World Economic Forum session on how can we unlock new sources of growth. This is taking place in Davos, Switzerland. The new economy is a shift from a manufacturing-based economy to a technology-driven economy. Notando Makutulela reports.
As the African continent races to prepare itself for the new economy, the African Continental Free Trade Area General Secretariat Wamkele Mene says the cost of infrastructure remains high. Mene says the African Development Bank estimates that the cost of infrastructure in Africa is about $150 annually. He says this is a compelling moment for the continent to accelerate market integration.
The cost of infrastructure is high. AFDB estimates it to be about $150 billion annually. The cost of transport and logistics continues to be high. Movement of persons is difficult outside of ECOWAS and outside of the East African community. So we've got a number of these barriers. However, in the wisdom of our heads of states, they said this is not sustainable. We are a continent of 1.4 billion people with a combined GDP of 3.4 trillion United States dollars. That is consumer spending and business spending. But if we don't accelerate integration of the market, we shall forever be a continent of potential, and we will never realize that potential.
Julius Bayo, President of the Republic of Sierra Leone, says the continent is not ready for the new economy.
With everything that is happening, I think you can only under benefit if you are prepared for it before it comes. The necessary infrastructure and also the readiness of the people in terms of the fit-for-purpose education to benefit from what is happening in the world. With serious problems with energy supply, connectivity, and other issues, the continent is not exactly prepared.
Rachel Glenister, President of the Center for Global Development, says investment in the education of young people in Africa has to be a key part of the continent's growth strategy.
Africa is going to be the continent with a lot of young people, but you do need to have the investment in education to be able to pull that off, and you need the trade barriers to be lower so that you've got big enough markets for people to come in and exploit those gains.
WEF continues to take place in Davos, Switzerland, where world leaders from government, business, civil society, and academia engage in forward-looking discussions to address global issues and set priorities this week. Notando Makutulela, SABC News, Johannesburg.
Africa in Business on Channel Africa.
It is exactly 4:45 Central African Time. The Africa Green Economy Summit 2026 will be taking place from the 24th to the 27th of February in Cape Town, South Africa. The theme this year is From Ambition to Action, Scaling Investment in Africa's Green and Blue Solutions. The summit will focus on climate finance, reflecting outcomes from recent international climate negotiations, including COP30 in Brazil. It will also reflect on the Africa Climate Finance Tracking Report 2025, which shows that the current funding covers only 25% of sub-Saharan Africa's annual climate finance needs, underscoring a significant delivery gap. For more on this, we joined on the line by Ian Banner, the founder and chairman of Go Green Africa. Good to have you with us. Welcome to Africa in Business.
Thami, it's wonderful to be with you and your listeners. Thank you.
Thank you. So let's unpack the theme for a moment. It's from ambition to action. What concrete actions does the summit hope to accelerate across African countries?
Well, the main purpose of the summit, simplistically, is to collect global capital with African green economy opportunity. So we run plenary sessions over the 2 days of the summit, but we also have pitch stages where this year we have, at the present, 56 companies that will be presenting to a large amount of global capital to solicit funding. And the importance of that is there are many great new initiatives that are either in play or about to get into play that are going to make a contribution towards the green economy and improving the lot of Africa as a continent. But they need funding, and this is the opportunity for them to put their best foot forward. So the impact is what it's about. It's about landing capital, why that creates jobs, and that's our biggest challenge.
And how will the summit highlight some innovative financing models, thinking of blended finance, green bonds, or even carbon markets?
Well, we have many streams that are in breakaway sessions that are investigating that entire portfolio that you are raising around financing, the structures of financing, climate finance, etc. Because the reality is Africa sits contributing only something like 3 to 4% of the emissions in the world. It only receives about 2 to 3% of the funding. And there is a massive gap, which you spoke of in your introduction, between the needs to address climate change, frankly, and the money that's coming into the system. But we are hopeful that Africa can be part of a big solution.
But how realistic is it really to close this gap? Because it's quite a big one, 75%. That's a huge gap.
It's like everything in life. How do you eat an elephant? You eat an elephant one mouthful at a time. And if you consider one of my big, hairy goals, which is an extension of AGES and as part of Go Green Africa, is our carbon sink in the DRC and Gabon is, holding about 32 trillion tons of carbon. It's a massive asset. And before it starts being exploited by greedy exploiters, we need to protect it and make sure that that turns to value for the benefit of local communities. It's the only way we are really going to protect very large landscapes in Africa successfully. And it results in a combination of ecotourism, rangers, management, hospitality, etc., and making sure that the real primary keystone inhabitants of Africa, which are our animal species, not the human species, are able to continue surviving as they should, plentifully and successfully.
So let's look at this financing and where the opportunities lie. How can African countries better leverage international climate finance following COP30 and its outcome?
I think it's a confidence thing. We've got to do a better job at marketing Africa. I mean, so carbon credits is an example. They are not a panacea, but they certainly are potentially a contributor towards the shortfall in financing. The reality is carbon markets are in disarray at present, but the mechanism, the idea that a polluter that generates a ton of carbon has to acquire a ton of set-off makes complete sense in my mind. We launched something called Carbon Market Africa Summit in October in Johannesburg. I'm pleased to say we discovered that the marketplace was desperate to come together. There's so much opportunity in this space, but due to cowboys and people who took advantage of structures and systems, it kind of collapsed. There was no trust. So trust is a key factor. If you want to know how we solve this, We've got to inject trust back into the system. We've got to build the system. And I believe that Africa is an enormous player in the future in this regard.
All right, Ian, we'll leave it at that, and wishing you all of the best.
Thami, thank you to you and your listeners.
Thank you. That's Ian Banner, the founder and chairman of Go Green Africa. He takes us to exactly 4:51.
Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African perspective.
And it's 9 minutes to go before we switch languages and enter the Francophone territory. And to usher us into that, the ever jolie Joël. Bonjour, madame.
Bonjour, Thami, merci. Bonjour à tous les auditeurs de Channel Africa. Alors, sur Vue d'Afrique, tout à l'heure, j'allais dire, on parlera de Patrice Emery Lumumba, ancien premier ministre de la RDC. La justice belge pourrait ouvrir la voie à un procès. Et donc, le parquet fédéral de Bruxelles soutient la tenue d'un procès visant un ancien diplomate belge dans une affaire emblématique de la mémoire coloniale et de la quête de vérité pour la famille Lumumba. Nous parlerons aussi du Burkina Faso. L'ancien président de transition Paul-Henri Sandaogo Damiba a été extradé au Togo en un temps record. Et aussi, dans la deuxième partie avec Jolino Sungu en football, en sport, il sera question entre autres de la Fédération marocaine de football qui accuse le Sénégal. Les détails, c'est tout à l'heure sur Vue d'Afrique. Merci beaucoup, Thami.
Merci beaucoup. There's Joël coming up in about 8 minutes time for Vue d'Afrique.
Africa in Business on Channel Africa.
So this is what we're closing off with today, a look at the markets with APSA. South Africa's annual consumer price inflation rose slightly last month to 3.6%. This is in line with economists' expectation. Statistics South Africa says on a month-on-month basis, prices increased by 0.2%. For more on this and the latest business and financial market developments, we're joined by Lindile Malchas, investment strategist at APSA Investments. Lindile, good to have you with us.
Good afternoon, Thami, and good afternoon to the listeners as well.
So perhaps let's start off, Lindile, with an idea of your thoughts on market performance so far this year. Yes, granted, it is only 21 days into January. But what has been your analysis and any patterns that you've started seeing emerging? Some of the key drivers, perhaps, for those observations as well in market movements.
Yes, I would say it has been a short period of time since we started the year, but it certainly has been an interesting start so far. Some of the trends that we are seeing are trends that are persisting, particularly from last year. So geopolitical tensions, we've seen those continue to persist with the tariffs that have been imposed by the U.S. Administration and threats of further tariffs as well. This, of course, has led to gold prices edging even higher, albeit market participants were believing that they are a bit elevated. So certainly seeing some of the themes from last year continuing to persist into this year. And if you look at the market performance and what that's meant for markets, it is a bit divergent across the different regions. So emerging markets have tended to do fairly better. So our local markets are up 4% so far, and that has been driven by the resources sector, predominantly on the back of the gold and platinum prices, those continuing to stay higher. Then if you look at the likes of the US, S&P 500 this year, more or less trading flat, so down about 70 basis points. And today markets are also opening negative in the US, so down about 2% so far. So it's been a pretty interesting start to the year.
So taking a look at Stats SA, they've released inflation figures for the month of December. What is APSA, or what are APSA's views rather, on the latest numbers and your inflation outlook as well for the year?
Yes, so certainly the figure did come in line with what markets had expected, and in terms of what we expected as well. We did expect it to come in at 3.6%, so ticking up slightly from the prior figure that we saw in December, so around 3.5%. This was also on the back of higher fuel prices, so the base effects on that are starting to seep into the amount, so reflecting some of those higher fuel inflation and some base effects on the housing costs as well. Then if you're looking at your core inflation, that's still remaining below headline inflation, so coming in at 3.3% and also coming in line with what markets had anticipated. And then I think what will be key following this inflation print that we saw will be the SARB's thoughts on inflation and the path that they are pursuing on interest rates. And that meeting will be next week, but certainly not expecting a cut at their first meeting, which they'll be holding next week.
So let's take a look at some company news for the moment and for today. We see that Karoo Ltd, they've released their third quarter results this morning. Can you unpack those for us?
Yes, so in terms of the results we saw this morning, it was a good set of results, quite solid financial performance from the company, seeing earnings per share that being up by 11%. Operating profits up about 14%, and we are seeing that the business is being supported by your stronger subscription numbers, and Cartrack also continues to grow, so seeing quite healthy subscription numbers there as well, and also the amount of members that they've been able to add within the subscribers, those are aiding to drive the revenue. And then in terms of management, they also reiterated that they are focused on growing the business and they are investing into strategic points within the business. So your likes of your video and Cartrack tag. Markets were a bit concerned on the back of this, and we did see the markets are selling off the share slightly because they were concerned around these investments and how they will impact margins in the short term. But I certainly do think that over the longer term that it does support the business's fundamentals overall.
Lindile Malgas, thank you so much for taking us through the markets for today.
Thanks, Thami.
Thank you. That's Lindile Malgas, investment strategist at Absa Investments. So there you have it. Karoo Ltd, they're a public company. They've got their headquarters out in Singapore, listed on NASDAQ as well as JSE, KRO. And I mean, what's quite clear about them really is the fact that Cartrack, that happens to be one of their flagship products, their Cartrack, and there's also Karoo Logistics. Well, that's how we come to the end of this Wednesday edition of Africa in Business. From myself, Thami Ngubeni, and the entire team, you have yourself a splendid afternoon further. Restez connectés as we hand over to the French desk and vous d'Afrique.